And officially welcome everyone to the Market Watch Group Midweek Check-in. I am Scott. These are our disclaimers. Don't forget, this is for educational, illustrative purposes only. We are not brokers. We are not advisors. We don't give guidance. We don't give recommendation. We are here working together to learn, to grow. Our agenda for today, first and foremost, today's opening analysis. We've been waiting. We've been building around what the Fed is going to do. Now, here's the thing. um, Hopefully, you still have a little bit of bullish on or put new bullish on. The futures are popping almost 1% today. Now, we'll see what kind of follow through we get. Sometimes it'll gap up and it'll just stay there, right? Sometimes it'll gap up and it'll come back down. So, there's no foregone conclusions here by any stretch. We still need to watch the market open. We need to watch the opening range, and we need to assess, hey, is this the market overreacting? Is this the market underreacting? What do we see going on here? The fact that we have a bullish reaction is not surprising. We're bullish. Our numbers are bullish, right? But certainly expectations of the Fed, and we've been talking about our Fed crack addiction. We gotta get our fix. What does the Fed have for us? We need it. Oh, we need those cuts, especially small caps. And I think that the market would like it to move to that September spot, rather than that November. We'll look at that here in just a second. We'll take a look at our posture. We'll think about mindset for open trades. I mean, it's pretty clear, right? It's pretty clear. The only trades you would have are bullish trades. We've been saying that for a little while, that we're bullish, that maybe there would be a hint of a hedge, but we haven't seen that. That hedge signal never came. We were ready for it if it did, but it didn't. It was just like, hey, this is potentially setting up. So what's the mindset? Well, you rode your bullish trades to this point. Great. Now you're going to see, does it continue? Did you really pick up some additional gains? Okay. We'll look at the shopping list. Is this going to trigger any new trades potentially? Were there any trades that were waiting and now they're going to be popped into action by the momentum generated by today's news? What are the setups? And we'll talk about trading plan. This is the last section. Right now, if you're in line with our cadence, you are working on your improvement strategies. Section 8, which are your trading goals. This is always a good one because the first 20 to 30 minutes that you dedicate to this trading section should be just brainstorming. What am I trying to get better? Right? What have I identified as my top two, maybe three priorities? And so, Stephen, you said that you covered all that with Glenn. I'm gonna assume you didn't cover it the way that I'm gonna cover it and go through it. And if you did, then I'm gonna say awesome. We overlapped and we reemphasized some pretty important concepts. But I have some very specific mechanisms that I use in this brainstorming process to flesh out and identify what are our core weaknesses, right? This is, you can look at this as like a root cause analysis. And when we're trying to do a root cause analysis, whatever we first identify, we have to think that's not it. That's not what's wrong. That's a symptom of what's wrong, right? And we don't want to fix symptoms. We want to fix problems. And so we need to start asking deeper questions. Why? Why did that happen? And when you get your why, ask why that happened. And when you get that why, ask why that happened, right? We're kind of like getting deeper into our trading. That's a huge problem so many traders have is they're just like, oh yeah, this is wrong, let's fix this. And it's just like, wait a second, you just scratched the surface and thought, here, I'm gonna fix this symptom. Then what? Then you'll have another symptom pop up. Fix the problem. That's what we're trying to do. And so I think that wrapping up with that on Thursday creates the perfect segue and transition into starting with some newbies that we have, some new members that we're going to make it a concerted effort. Everyone who's been around for a while, everyone who's new, this next iteration on our trading plans, it's going to be our big summer push, right? We're going to have a lot of interaction on Discord, a lot of back and forth. We're talking about some best practices, and we're going to really strengthen our trading plans over the next 2 months. So I'm excited about it. I'm enlisting Glenn and Gary. We've got some mechanisms to improve and increase our exposure as your coaches, mentors, whatever we are called to you. So, anyways, that's we're very excited about that. Can't wait to work on that with everybody. Okay, let's get into it. Let's talk about it. What's happening there? That's the green I was talking about. Let me see if this is fully up to date. Yeah, some really cool new features and things that we're trying coming out. So the news came, we were flat, and it's like across the board. As soon as that news came in, all right, let's just see what that news exactly was. So CPI was expected to come in previous at 0.3. We were supposed to come in at 0.1, 3.4, 3.4, 3.3, 3.3, 3.6, 3.5. Okay, so 3.4 and 3.5. Seems like we'd have to get better than that. Let's see. 3.3 and 3.4. 3.3 and 3.4, and we were expecting 3.4 and 3.5. Oh yeah. That's that one thing just coming in lower than expectations. We're gonna wait. We're gonna give the market maybe 20 minutes. So we're not going to jump in. The market's going to open here in a minute. We're going to jump into the FedWatch tool after the opening range. I want to give it time to absorb before we go look at it, because I think it's going to adjust quite quickly. So, okay, so that's big. I mean, that's a huge surge of what the market has been wanting. Tomorrow we have PPI. But yeah, that's we've said to ourselves and came to, I would think, a fairly consensus agreement that the Fed is only going to lower interest rates this year if inflation starts to drop again. Here it is, right? That inflation is starting to drop again. If they didn't cut this year and they didn't cut till next year, the concern about that is the reason they're doing it is no longer because inflation is good. but because they're starting to face increased fears that if they don't, they're going to cause an inflation, and that they got inflation as low as they could, but now growth is a bigger problem. Right now, inflation is the biggest problem, right? Until the Fed has to face a bigger problem than inflation, then they're going to continue to face inflation. That's why we watch jobs reports so closely, and other economic indicators, because if the economy is still churning along, if you don't remember, way back when, 2 years ago, when they first started really aggressively raising interest rates, they gave a warning, and they said, we expect that unemployment could rise by 2%. So it was around 3.6 at the time, and they said it could rise to 5.6. Now it's gone up to 3.9, the unemployment rate, and it's kind of organically moved that way. There's things about the calculations that I admittedly don't understand, because we haven't net lost any jobs, even though unemployment has ticked up. There's other things like people dropping out of the labor market and underemployment, and there's all these other factors. But what's happened is, as the Fed has raised, what they warned about didn't happen. We didn't have this surge. We didn't lose 3 million jobs. Employment stayed strong. Everything has stayed. Corporate earnings have stayed strong. Everything has stayed strong, which gives the Fed the ability to maintain patience, right? If any of that, but remember that there's up to a 18 to 20 month lag from when they raise interest rates to when it really impacts the market. So a good chunk, 2% of their cuts, are just now hitting the market still. So we're not like, oh, we're out of the woods, we're safe. No, there's going to be, we're going to feel that. You're going to continue to, and then that's the problem, right? Is as we continue to feel that, the Fed's hope is that the inflation has come down. So then, as they start to feel that contraction in the economy, they can cut the rates, and then that sort of eases that pressure. And whoo, well done, Jer Bear, right? That's a tough job. That's a tough job. Let's go look at our opening range. So we talked about the gap up, but the next thing we would want to look for then is what? Follow through. Does it follow? We gapped up. Here it is. Boom. Let's zoom in on this a little bit. So there's our gap. Bang. But the problem is we gapped to here, and now what? Now we're gonna watch to see what our opening range does. But it's like I said, it's no foregone conclusion that we're just gonna gap up and run. This thing could fill, right? This thing could meander back and forth and end up down in here, and it has kind of a doji. Anything could happen right now. What's happening is this: if you are bullish, you're getting rewarded for it right now, right? You're getting rewarded for it. So the question is, what are you doing with that? Has that achieved any targets? You should probably be thinking about raising stops, so that if it starts to give it back, you're locked in and you said, great, I finished. I got what I wanted from this. Okay. What else do we want to take a look at? Let's take a look at that hedge signal setup. Where's my... So here's what's interesting. I mean, I was locked and loaded. My finger was on the trigger. Tell me if you were with me on this one. Tell me if you were with me on this one. But I was ready to go. This thing had pulled back, and right here, I'm like, actually, the first time was here. And then here. And even right in this area, I'm like, is it? And it was close. But remember, it had to get above the previous day. and this day it didn't. And then the next day, yesterday, it would have to get above, and it didn't. It finished here. So all of this is just sort of meandering around a little bit. Even today, right? Even today, you're noticing that this is pinching and we're still just kind of grinding along at this bottom. I'll tell you this, we're still not out of the woods. It's not, it's still in the throes, and that's working off of this, of a higher low. So if we go like this, and then we go like this, and this thing has turned, that is now, we haven't actually gone higher yet. We're still pushing lower. This thing, if we get 2 more bullish days, this could break back below 12, and then that signal is now nullified. There's no more signal. That's why I'm saying, like, it's good. If you've held on to some bullish things, fabulous. Pat yourself on the back, book some gains. But this is still a hedge signal. And if you end up not being in any bullish trades, it's not a hedge signal. It's a speculative trade to the downside, which you might be thinking, oh, I'm willing to put that on. If you don't have much bullish on and you're not looking to trade to the downside yet, there's no signal for you. There's nothing to hedge. You're not speculating to the downside. So that's what we have developing. Let's get into the watch list. Do we get through our full routine? Let me make sure. Yeah, I mean, we basically have PPI tomorrow, a little bit of consumer sentiment. We know inflation was the news. Let's go through the watch list. Let's start with our friend Apple, which we love. Oh, market posture. Yes, look at Steven keeping me honest on my own agenda. Long-term trend, obviously, for me, I've said it's going to be there for a while. I don't see much that's going to change that. The short-term trend, however, that one is a little bit more potential. I mean, that's a higher high, right? But remember that we've moved away from achievement scoring, meaning a higher high, a higher low, a lower high. We've moved away from that. This move, pushing higher like this, is well within the construct of this channel that we've currently mapped. So this moving up like this, it can move all the way up to here. And what does it do? It confirms the channel that we currently drew. So it's like, hey, look at us. We're great at this channel. Well done. But it doesn't change the score. I think this just confirms, yeah, we've got a good read. It's right where we were. I don't know. Anyone disagree? I think that looks like this channel is spot on. It's confirming it. So that's not going to change. That's for me. That looks exactly the way it did. Volume, nothing new. No new volume. So volume is going to stay the same. Major market. So we had a little bit of a drop in the major market. I think we're going to get that back. That's the first place for me. The fact, let me know what you guys think. The fact that the inflation data came better than expected, which is obviously the next domino. There is the fortuitous way the Fed looks at that, right? That's the Fed loves the data. It's more likely to lead to a cut. The cut's going to be most advantageous to small caps. Ipso ergo facto. Major market likely to go up 1/4 point. Sector rotation. I think sector rotation is actually took a look at the Russell way down over Dow today at the 66. Okay. You know what's funny, Stephen? I don't look at that. So the weekly and the major market and the sector, I really don't look at every day. I might do what we're doing now, and even now, I really think about it more than I go run the analysis. That's interesting. It is, right? You're exactly right. It's a snapshot, but it's an evolving snapshot. So it is, if that was a mutually exclusive and independent event, but it's not, because you're looking at it relative to yesterday and the day before, relative to the score of the last week. And so think about this, right? If I just draw a picture of a guy standing, it's just a picture. It's just a snapshot in time. But if the next picture he lifts his leg, and the next picture he lifts it, and the next picture he starts to lower it, and I keep having these pictures, all of a sudden I have a flip book, and I have a cartoon, and it's moving, and I see movement, right? That's the whole point of what we're doing. Is if we have a snapshot in time every week, and then I look at that, I can now I can see the motion, right? I can see the momentum. That's the point, right? You guys like that metaphor? The picture book, the little guy walking. Thanks. That was new. I felt inspired with that one. I don't know if it came off well, but I thought I'd try it on and see how it felt. Oh, I got a from Sandy, so I don't know. It seems like it's not hitting well. I'm gonna wait till press. Press might save me and tell me it was. Oh, it's good. Okay, good. Sector rotation. I think sector rotation. Thank you, Phil. Phil's gonna throw me a lifeline. Sector rotation. I think we're gonna get a quarter of a point there. Apple, come on, man. Apple's popping. Meta's popping. Google's popping. Nvidia's popping. I don't know what it is you're asking for from technology and communication services, but everybody's at the table. Everyone's sitting down. We're ready to have dinner. Let's go. I think we're going to see that bump. And the VIX, unfortunately, the VIX really is kind of still in a bit of a like, it could still drop a quarter of a point, interestingly. If it flags a hedge, it's going to drop. Either way, though, we're still going to probably see, I would say, a quarter to a half a point as of now. Okay. All right. Thank you for the reminder. Oh, now that little reminder gave our opening range a little bit of time, and we said, is there follow through? Yes, there is. Right? Yes, there is. For now. Okay. It's a long day. Out of 6 hours and 30 minutes, we are 13 minutes in. But for now, it looks good. Let's get to the comprehensive watch list. Okay. Look at you, Apple. So, yes, it was a good signal back here on Apple, and I think, likely shook a good number of people out actually on this day before this news. But if you held on, you got paid off handsomely. You're still continuing to get paid. What is it if you're not in? Nothing. You're a spectator until the next time this thing takes a breather. This train is moving at full speed. Could you jump on? Yeah, maybe. Are you likely to? Right? When you think about where would I establish risk on something like this, even if I transition this to a Heikin Ashi continuation perspective, my stop is down here in the 190s, and this thing's at 211. So if I'm taking $20 of risk, what do I need for gain? 40? Do you think it's going to go to 250? That's up there. So it's like, oh, yeah, I don't know that I'm expecting that. Okay, gonna be patient, right? If you missed it, you missed it. We don't, this is a good, quick psychology lesson. Something like this is where traders really start to succumb to FOMO, fear of missing out. Oh, look, it's moving without me. I need to, look, if it's moving without you, then you didn't catch what you're trying to catch. We aren't trying to catch overbought stocks to keep going higher, because the fact is that this is a one-off situation. There's no way I would ever try to build my trading to catch this. I don't try to catch one-offs. I try to catch the things that I can catch over and over and over again, and that I hope as I'm catching those, every now and again one of these slips in and just gives me a big old doozy winner. That's what we're hoping for, right? We have to set expectations appropriately. This doesn't do anything to me to say, oh, how can I get in now? If I'm not already in, all I'm doing is watching this. AMD. You can see for chip stocks, AMD is really kind of a sideways one. I mean, it's at support, but it's lagging momentum relative to NVIDIA, relative to Taiwan Semiconductor, relative to Micron. I don't know. For me, it's a little behind. Amazon, we missed it. I personally did not like the fact that this had dropped as far as it had, so I did not identify this. I said, for me, it's got to do something. Well, it did. It V'd. I would definitely, if you notice how slow this fell and how fast it recovered, great. This looks great. If this comes down and catches on top of this 50 right here, that's our trade. Now we just sit back and wait. That's it. Now I just wait for it to come. So as you're going through your watch list, what you shouldn't do is say, is this a trade, yes or no? And then move on. You should say, is this a trade, yes or no? And if you say no, then be thinking, is it close to the next trade? Right? Is it close to the next trade? AXP. Ooh, financials. There was a lot of financial signals setting up, and then yesterday, financials just got beat up. You can see AXP took a hit. Boeing is setting up if anyone is thinking about it. You can see yesterday Bank of America came all the way down, and now it's turning. So for some of these, this little hiccup may be developing into signals, but I would be careful because some of these have dropped below their 50. Citigroup took a hit below. There's Caterpillar. Okay, Colgate-Palmolive. I still like consumer defensive, and I think that there's starting to be some setups there. So even though the market's moved, that doesn't just mean like, oh, that's it, everything moved without me. No, there's always something developing. So let's just make sure we're aware of it. Chipotle. Remember, Chipotle is got their split. It's just hard to trade right now. The options, because the stock's $3,000. I mean, the options are so expensive. The spreads are wide. I think this thing is going to have a nice continuation after the split due to how tradable it's going to make it. So this is going to be an interesting one. Oil still down. We love to see that. Costco still up. I want my trade, but I'm going to be patient waiting for it to come. If you remember, we were really thinking it might have come here, and then there's the turn. So if you've seen times like this where you thought it was going to come and then it went the other way, let me mark this. This is where you can take advantage with a different style of trade, which is continuation trades. And I do want to encourage developing that type of a system. And so part of our trying to make sure that we have more alerts in our trade alerts is to expand into not just looking at potential bounce trades, but also looking at potential continuation trades. What would be the difference? Well, let me change my chart real fast. What time is it? Okay, we're still okay. I didn't get the signal I wanted from, from the stochastics. It was kind of coming down, but it was just, you can see that as this was moving up, the stochastics was just meandering, and you're like, that doesn't make a lot of sense. But I got the Heikin Ashi. On that day, I got the Heikin Ashi. Anytime I get this, what can I do? I can get in and I can put my stop below the Heikin Ashi. Then use the bottom of the Heikin Ashi as a reference point to move the stop up. And you'll notice I would have moved it up to here, and then the next day nothing because it didn't really go much. And then today it's moving again and move the stop up a little bit more. So at this point, the entry's down here around, let's say 810, 811, something like that. The stock is at 852, and the stop would be here around 840. So of the 40 you've gained, you've got 30 of 40 locked in. That's a continuation trade. It's already showing that Heikin Ashi, which means you already have the ability to utilize it as a reference point for a stop loss and as a reference point for how you're going to adjust your stop loss higher, right? That's so that's kind of what the mechanism will be. So if we do a continuation trade in the alert will say we're going to utilize a daily Heikin Ashi to adjust the stop. At the end of every day for the next day, we would just tighten the stop, tighten the stop, tighten the stop, tighten the stop. Let it go. Okay. That was after earnings. You're exactly right. And after earnings, that's a hammer. Only that's a Heikin Ashi hammer. So it's not quite the same. When we switch it back, well, that's actually still a hammer. Or possibly, if you don't like the fact that there's ever so slightly a shadow up here, we can call that a Dragonfly Doji. Right, a Dragonfly Doji. And it was after earnings. And that's sometimes what's hard, right? Is we can't trade before earnings. Well, we can. I don't. That's my preference. I don't trade earnings. But immediately after, certainly something like this right here, after this hammer, the next day you get this confirmation. Like I said, you're in, we'll call it, we said 810, 814. So you're in at 814, you're up 38 points, and your stop loss is at 840, locking in 2/3 of your gain. That's a continuation trade. It's a little bit different than what we typically do, but I think introducing that will increase our trade opportunities. Okay, continuing on, CRBG. CRBG, it's been slow, but it never got rocked like some financials did. I would say this is worth a consideration. It's a little bit slow and steady, so it might do what it did here, where it bounces a little, comes back down, then bounces. So for me, something like this, buying an option could be harder because you might be in this trade for 2 or 3 weeks. So possibly a spread trade or even just buying the stock, right? Would be a consideration. DAL still kind of flat through here, but here's what I'll tell you. Came back down to the 50, bounced, had a little bit of a hiccup, but those hiccups, if they don't break the 50 and then they turn and this turns, you know I love these, right? It went up, hiccuped from right there. It bounced, it bounced, it bounced, right? I mean, this thing just kept bouncing. So, yeah, same kind of a situation. I like Delta. Delta's on the list for this week. Dow's moving higher. EQH, we liked that one. That one's moving higher. Caught the bounce. FCX, I don't know. I'm iffy on materials and gold, but maybe. GBTC. GE, I think GE is still holding up. If it gets a price momentum, I think it could turn into a signal. Gold, iffy for me. Google, strong. Google gave a signal back here. Could have shook you out a little bit and then gone. I don't know. That's a tough one. That's a tough one right there. If you're still in, well done. But it's not an entry right now. This him stock, we found this one and we were looking for it. Haven't been able to find an entry yet. Look at the small caps, up 3% today. Huge reaction to this news today. Home builders. Why are home builders bouncing? Well, because home builders right now are stymied somewhat by interest rates. It's hard to afford a new home. It's a lot easier to buy a new home if the interest rates come down. So the home builders are praying for it. Mortgage brokers are. Coca-Cola, prime candidate on our list. This one is not a setup today. The market's good today, and this one's pulling back a little bit. But the defensives are still lined up. So the staples, this is still valid. We're still looking at this week. Absolutely. Meta. So again, for me, Meta was in a basing pattern here. I did not look at that as a signal. Now that we've reached a new high, the pullback is valid. Looking for the next trade. Manual life, same thing, kind of slow through this entry opportunity. 3M moving higher, another defensive. Morgan. So Morgan could be the leader, right? Oftentimes when you look at these, you're like, I don't know, it doesn't look great. I'm actually looking at Morgan as like, okay, I think financials got shook, but they're going to be fine. And if that's the case, we're going to see that. So for me right now, Morgan is definitely a leading candidate. Microsoft looks great, but it's overextended. It was back here and not at all. This is the trade, or there is no trade. We can't wait till now. Micron, nice move. Same thing. Overextended. Netflix, nice and slow and steady there. I think you could actually think about a continuation trade on that. NVIDIA, I don't know what happened there. I hate when these things show up. That didn't really happen. What happened is what you see here, but what you see here, it's I don't know. It's hard to read right now, right? Like the stochastics is coming down. This is turning up. I would actually say this looks like today it could be breaking out of a flag. And I would say that this is close. Early entry today, confirmed tomorrow. I like NVIDIA, actually. QQQ looks very strong. The NASDAQ is very strong. Technology is leading. That's bullish. Everything we're seeing is confirming and improving our current posture. RTX looks like it's sliding into a new trade right here. Put this one as a candidate on our list. Getting close. SPY, very strong today. You can see we have some follow through, at least as of now. There's, remember we said back here, you can't avoid these as entries. If you like what's going on with price, don't shy away from red candles. And here we are. So we had a weird little dollar, like, oh, the dollar looked like it was going to break to the upside, which we said we would interpret as negatively. It didn't. It didn't hold. It's right back down here. Now, it hasn't broken down, right? We want it to break below 28.5. If it breaks 28.5, I'm going to interpret that as more positive. Right now, I would put the dollar still in limbo. Neither helping nor hurting. Look at that VIX. Very strong. Back down to 12. But the hedge is still at play. This is all still part of the same low. VRT. VRT looks tradable. You can kind of see, hey, this looks very similar. Now, it didn't have earnings, but very similar to what we saw back here. We're trying to bounce. We're hitting this 50, turning above. Wells Fargo, another financial that got beat a little bit. Here's Walmart. Walmart, okay. We've been waiting for it. Here it comes. Something's setting up. So we have some things that are setting up. And we have some things that are kind of still moving, but I don't see a lot by way of triggers today? I would say EQH is one that maybe if you were looking for a trade. Yeah, we'll see. Like I said, there's now the chance for alerts to come in the last hour of the day. So make sure you're, looking for those. Any alerts that come in the last hour, if you miss them at the last hour, they're still viable the next morning as long as you can still get, the entry parameters met. Okay, so that's it for our watch list. Last thing we're going to do today is take a quick peek at the trading plan. Remember, this is what we're working on. This next time around, some of you who have this downloaded, I'm gonna change it. I'm gonna re-upload this. I am eliminating outcome goals. I don't think you should have it. I don't think it's beneficial. Saying I have a goal of making 30% this year. What if you make 28? Are you gonna be disappointed? What if the market makes 25 and you make 30? Are you going to be okay with that? Like, I think you should be, if the market makes 25, I think you should be looking for 40 or 50, right? It has to be relative to certain things. And I think that your goals should be oriented around being a better trader, having better rules, having a stronger plan, having better record keeping. If all those things are in place, your results will be better. So, but what are we looking to do? Set some goals. Look at your weaknesses, look at your results, look back at some of the observations you've had of some, hey, I think if I did this, then this might happen, right? Hypothesize, and then implement the scientific method by implementing your hypothesis, watching to see what the results are, and if it confirms your hypothesis or not. If it does, you keep that. If it doesn't, you get rid of it. That's how we make subtle, fine-tune adjustments to our trading. All right. Questions? You don't believe we have PLTR? Oh, sorry. Let me get that. Low house volume and supply, high interest rates. Yeah, it's tough. Let's look at Palantir. We loved Palantir for a while. Okay. Yes, I will add Palantir back to the list. Of course I will. I remember us having at least 2 really solid trades on Palantir during last year's AI pop. What has this done? Well, for me, this is really just barely qualified. Here's the consolidation. And you're like, oh, it broke its consolidation, so that's a trade, right? Nope, not until it comes back and makes a higher low. Oh, wait a second. It didn't do that. It came all the way back down here. So then at that point, this trade is nullified. That's an invalidated breakout. So we go to this consolidation. And guess what just happened? It broke out and it made a higher high. So now what are we waiting for? This higher low. Great. That's good technical analysis. Yeah? Patience. We're not trying to run after this thing. We're trying to say, hey, if this pulls back to 22, makes a higher low, we have a trade on our hands. I love it. Thank you for flagging that, you two. Magnificent. Oh, we have a, sorry. I'm glad you pointed that out, Phil. We have a Philip. I wasn't sure if that was like joining from a computer and a phone. I do that sometimes. Pop up twice. Yeah, Philip, welcome out. Phil and Philip is interchangeable. That's my brother's name. I don't even know if I've told Phil that I have a brother named Philip. And I interchangeably call him Phil and Philip indiscriminately. So the Phils and Philips here, you're going to get the same treatment, but it comes from a place of love. So welcome to you. We have some new members. We're as a group trying to figure out how we can make the best possible onboarding experience because we want the experience to be meaningful, to be deep, right? We don't want a superficial experience. We want it to be like, yeah, this is where I can come and get everything I need in support of my endeavor of learning to trade. But in order to provide that, it's going to be to some extent, there's going to be some sophistication. There's going to be some concepts that right get deeper, and so we're trying to find that balance of bringing you on, making sure you're comfortable, making your first trade, understanding what we're doing with technical analysis, but also making sure that people who've been here for 8 months are like, I love it. I get so much from it. So the people who have been here for a while are helping. I'll ask you new members to help as well with your perspective as new. Let us know. There's going to be a new channel here, probably today, called the suggestion box, where you can come in and say, hey, it would be great if, love it. I want feedback. That's the way I improve as a trader. I get feedback and I take it and I say, this is what I can do better. The way we're going to improve as a group, we need your feedback so we can take it and say, this is what we're going to do to get better. And the problem we're solving for right now, I'm trying to do it internally for myself as well, is I know I'm prone to just like migrating into advanced concepts without even realizing it. And so I'm trying to make sure that I'm keeping that, hey, if this is my first day, can I follow what's going on here and be ready? So we're building those resources. We're thinking about those strategies. And so, if we do it right, you're like, that was super helpful. Let us know. If we missed the mark and you're like, ooh, that was close, but if you would have done it this way, let us know. We really appreciate it. Great question. I love this. I'm going to end with this. Press said, Scott, the entire time I've been trading, it has been a Fed anticipation game. Is that what you call it? I call it a addicted to Fed crack game. I need a fix. Give me a fix. Yours sounds better. Sounds softer. It doesn't sound like we're junkies out back in the alleyway with the shakes waiting for some Fed information. But you're right, Press. And you've probably heard me mention it and say how much I hate it. I hate markets that are so sensitive to the Fed, because what happens, and you've seen this, is everyone starts trying to get in front of it. We got in front of it. No, we were wrong. And it comes back down. It adds an element of freneticity. Is that a word? Freneticism. It becomes more frenetic. Yeah, right. It chops it around a little bit more. I don't like it either. So it's not always like this at all. Yeah. In fact, if we can get to this inflation just kind of easing up a little bit, I think you'll see we get to a point where we're back in the sixes, and look, even with the Fed, we were in the sixes in November, December, January, February. We had some good months in there, right? So, but yeah, I feel your frustration without a doubt. All right. Well, look, I got to run. We're a little over. I appreciate the extra time. It's great to see everybody. What's next? Look, the calendar. There are meetings scheduled for you guys. If you want to start trying to get into them, we're going to start having me and Glenn and Gary trying to pop into those member meetings, and I'll make sure I flag for you when they're going to be there so you can pop in, ask some questions, things like that. But we really want to make sure you're utilizing Discord as a resource, because there's a lot available for you in here. Okay, thanks, guys. It's good to see everybody. Enjoy the rest of your day. Our next event will be tomorrow night, 8:30 p.m. Eastern Time. We're going to talk about trading plan prioritizations, identifying and prioritizing core weaknesses to make sure that at any given time when we have a little bit of spare time, we know exactly how we're going to use it. Thanks, guys. Have a great rest of your day. And as always, happy trading.